Hello and welcome to the weekly stock and index review. It is Saturday, January 28th. Let's dive right in. So on the screen right now, I have Nasdaq, and if you've been following, you know that I do this every week. I always go over this and see the moves that happened. But I know I've kind of been a little wishy-washy over the last few months, thinking that it's going to finally hit and then it drops lower and it's going to hit and it's going to drop lower. I'm still not convinced it's going to go all the way to where I planned, but every single time it makes a new high, it gets my hopes up, guys. So here it is. All right, this is kind of where we're sitting at now. You saw all this volume building up and then finally dropped for a few weeks, and now it's been climbing for about 3. So my original target is kind of in play. All right, I still predict that it's going to be around this zone once it closes that gap. And just to show you where it's at on my actual daily chart where I'm holding it all up, this is the spot where I predicted it would actually hit before. So the bottom would be 12,581, and if we take a look here, right there, 12,580. I mean, it's pretty damn close, isn't it? Right? Just the exact same spot I would assume would be right there. So once it closes off that gap, two potential things. I'm definitely not taking any buys as it is right now, because again, it made a new high and just kind of dojied out in that last hour, right? It kind of reversed slightly. But if it hits this target and climbs, it breaks this one, that is the absolute peak. I do not expect it to go higher than that. Okay, because to go higher, it needs to climb another 500 points approximately from that zone in order to close off another gap. I do not see that happening this time around. I believe, once again, this is going to be our peak. And then we're going to drop to make new lows, and after those new lows, that's going to be it. Then the stock market will be up for grabs for all those who were patient and have liquidity to burn through. Now, just so you know what I did right here, I just took the MACD and I drew lines specifically as to which points are hit most often and where they reverse from. So as you can see, the higher line, it's extremely overbought, and at the bottom, extremely oversold. Typically at those zones, pullback is imminent. Okay, that's why I set it up that way. And currently, as you can see, even on the daily time frame, it is hitting overbought territory right here on the RSI. Typically what happens when it hits overbought, like it is right here, as you can see, it peaked and then it started dropping. Okay, this is why I don't expect this to go much higher. If we have a really strong move within one day and it just trips this 400 pips or points, sorry, you've seen this happen. I mean, Nasdaq could drop 800 points in one day. So it's within the entire realm of possibility. But even taking a look on the daily time frame, you could see that EMA, and it just tipped it and then started dropping once again. So that could have been the rejection point. Either way, I'm completely liquid now. I am not wanting to jump in any stock. Typically what happens when the FOMO kicks in and these bull runs, happen for this long, people are like, oh, finally, it's starting to climb. I'm going to jump right in. And that's how you get burned. Okay, so just be careful. I personally, like I said, am going to be liquid until I see it go lower. I'm not going to be jumping in on any stocks. Dividends right now would probably be the safest bet to take. Okay, and when it comes to that, wrong chart, sorry. When it comes to something like that, we'll be looking at the Dow Jones index. Okay, and even here, as you saw, it broke through my previous resistance line. Right, you saw it going, finally broke through, almost tested it, and now it's going to go up. Okay, so it's not moving the same rate as Nasdaq, because Nasdaq is primarily growth stocks, tech, some pharmaceuticals, right? Where we know Dow Jones is more blue chips, and they're the ones that keep the dividends. Okay, so right now a lot of volume is building here. I project that it will still drop with Nasdaq, but not as sharply. As you saw, we've made new highs, so what that would entail is we take a fib and we draw it the opposite direction now. We draw it from low to a high, so, and we extend it, let's say. So a good potential slowly drop to there, to the 618, to reject off that resistance, which is now going to be a support, and start climbing up once again. All right, that's what I see with the two indexes right now. I mean, we can jump on the US 30 just to clarify that a little bit more, but ultimately it's the same thing. Like you saw, it just after hours here, it actually hit this zone and started going up. But again, I predict that it will be a very similar happenstance. So again, from the high right here to the low, you can see right now it's just chilling out at that 618, and that typically means that it's on the verge of dropping. Okay, so this is telling me it's going to drop. Nasdaq is telling me that it's oversold. And now when I'm going to pop into individual stocks, let's see how that looks like. All right, Apple. So Apple, we can see right here, there is an imbalance right here on this candle to be filled. And typically what's been happening with this is, even if we draw a ray, let's see from the last little while. Okay, so we see that the last 2 days it broke through that. It could potentially test it again, but you know, it's been moving pretty smoothly. Earnings will come out on the 2nd. It's estimated that it's going to go up. So we'll see. I mean, earnings season typically drives stocks upwards if they have good reports. But again, I believe that after we get a lot of the major ones that come in, just like they did way back here, right, where the earnings were coming and you could see earnings season climbing, and then drop, a little bit of a rally, and then further drop, right? Same idea, right? Earnings, look at this, climbing, hit a peak after earnings season's done, drop, right? Same here. The only difference is it was already dropping. Earnings season was negative in the beginning of last year. Well, Q1 of last year, right? As you can see here, earnings season, you know, dropping, a little bit of a rally, but here it's been consistent. The last 3 earnings have all climbed, and then about less than a month later, about 3 weeks, everything starts dropping off, right? So, I mean, again, we could see this happen much faster, or we could have a very slow climb to this point and drop quick. But again, because we are overbought, I believe what's going to happen sooner rather than later. Now, let's see on some others. All right, now to dive into some other stocks, I'm going to bring along Amy. She's with me on this video. So, Amy, what 3 stocks would you like me to take a look at? JP Morgan. Okay. Now, were you sure was it BlackRock or Birchcliff? Okay, no problem. So we'll do Birchcliff, not BlackRock. No big deal. All right, so we'll start with Birchcliff itself. All right. Now, I was a big fan of this one way back in, where was it, August, right? Because I knew they had great earnings potentially coming out, and I snagged it for about 2 weeks, and I ended up making, where was it? I think I grabbed it the day before earnings came out. Yeah, so I was able to snag it for about 30% gain. So that was very nice over the span of 2 weeks. But over the last little while, it's been dropping off. Now, I'm a firm believer in the power of the oil here as well. And as you can see, in the long term, where it's Birchcliff and oil, they have a very similar chart, right? So even if I take, and I'll just do a split screen, okay, and the bottom one, unfortunately, it's going to, oh, never mind, that changed. Usually it doesn't do that. Okay, so I'm going to take that messy Nasdaq chart off, and we will put oil. All right, there we go, and I'll switch it back. So what I see here on crude, okay, you could see the moves are pretty close. They're not exactly identical, but when we had, and again, the reason being is because Birchcliff is a Canadian company. But anyway, the big spike right here didn't really affect the Canadian stocks because, again, it was a slow climb and it just happened right after earnings, that big move. But as you see, where it started almost being parallel is here. right? Like you could see the crosshairs as they're kind of moving, and then it had a little bit of a bump up. Birchcliff went up, oil kind of still started dropping a little bit, and then it finally hit its bottom right here, and then it climbed. Same here, hit its bottom, and then it climbed, and then it kind of went sideways for a little bit, just like here, and then it started dropping down. Right, so Birchcliff will follow oil pretty consistently. I would say that it'd be better off to snag oil when it's on the climb again, any oil stocks especially, right? So, I mean, that includes not just Birchcliff, but there's ConocoPhillips, there's Occidental, there's Exxon, there's Chevron, right? All the Imperial, all these big companies are going to have very similar charts. Okay, the only difference is because Birchcliff is Canadian, doesn't really rely on the overseas drilling or offshore drilling or anything like this. It's going to be a little bit more stable, but it all really depends on Canadian economy and government policies. That's the only thing that really sucks with oil companies, right? Even though that they're doing well, right? As you can see, every earnings they're up, surprise earnings. I mean, revenue a little bit less, but as far as climbing per share, like way better than expected, right? And they also pay out a dividend. So I mean, it's not huge. It's 2 cents on the stock, but it's still something to consider, right? Like this one was 20-cent dividend. This one was 2 cent dividend. This one was 2 cent dividend. This one was 2 cent dividend. So it looks like the 20 cent was because they just had a very good quarter. Okay, so not a high yielding dividend. I wouldn't recommend it for that. But as far as what it looks like in the long term, let's see our like all the way at the bottom right here, the furthest low that we have, all the way up to the high. You know, we've seen it being tested, and it's kind of sitting at the 618, but it's been sitting there twice. All right, so if we take it from this low, right, to this high, because that is the more current move, it went real deep. Okay, but right now you can see it hit its volume mark there in the charts, and it very likely might drop again, but this will be kind of the point of contention. If it goes below this area, that'll be a very good time to buy. Okay, I wouldn't get it above that. Once it drops below here, this is a good time to see it. You know, you could set a buy stop for $8.10 once it might reverse. You know, it might just go below this for one day and climb higher, but that will be kind of the tell. If it goes below this, setting a buy stop so that when it reverses, you catch it on the move up, because right now it's like trying to catch a falling knife, right? Trying to see where the bottom is going to be may not be the best bet. Okay, but the ultimate bottom is right here at $7.50. I don't believe we're going to be seeing that. I think it's going to be 8.10, 8.11 is potentially the bottom now before it reverses. Okay, especially because it's been climbing pretty steadily, right? Like if we look all the way back in its history, let's do the weekly. Okay, you can see that every time it's steady. Right? Again, it's oil stocks. They're kind of all over the place when it comes to government policies. So 2008, we saw the big spike here, right? As prices for housing started to really drop like crazy, oil went up. Right? So every time there's large moves in the market of something else, oil tends to go pretty high. And then during the Obama years, it peaked twice on 2011, 2014. And then, you know, once Trump came into office, it started stabilizing and slowly dropping because prices became much cheaper, and it was more reasonable for people to buy and whatnot, and the market was kind of flooded with the product. Okay, but overall, this is kind of what I see in the short term. In the long term, we're not going to go all the way back there. So yeah, that's kind of what I predict. 8.10 would be the safe bet to set a marker or buy stop. All right, next one, Netflix, or I guess JP Morgan, since it's next on the list. So JP Morgan Chase, let's do the long-term weekly chart right now, seeing where it's at. So in 2020, it really dropped down to its lows. Okay, so this is a good baseline. It's not going to go this low again, just because everything is recovering. JP Morgan, lending, bank, right? So when more people are in debt, the more money these guys make. So what you see happening right now, from this low all the way to the high that we had back in November, the low we've hit in October. So now, as everything else is dropping, right, you can see JP Morgan is on a pretty solid recovery phase, right? Like it's similar to how the Dow Jones is, except this kind of moved lower than the Dow. Because Nasdaq looks nothing like this, right? Like we haven't recovered Nasdaq all the way since October. It's been kind of up and down. So what I see right now happening with JP Morgan Chase, we kind of hit that 618 retracement. It is sitting in overbought territory. As you can see, it just happened about a week and a half ago, and then it just kind of spiked down. It might do the same thing. It didn't really break that middle, so I have a feeling it will kind of come up once again and then drop. Very likely we'll be seeing a little bit of divergence before that move down. I would say a safe bet to get it. Let's draw a volume line from the high to the lows there. And you can see the point of control is almost on top of the 618. So very good opportunity for JP Morgan to drop down to 115 to grab it for the potential climbs. Dividend pays decent. I mean, it's $1 per share right now, so that is looking at about 1%. Not fantastic, mind you, but still all right. Okay. We'll get into a dividend list next week, guys. We'll go through like the top 20 companies that have the highest dividend yields. So that's kind of what I see for JP Morgan in the short term, and then Netflix. All right. Netflix, it's really too bad. Grabbing it at the bottom here made me a little bit nervous because it was sitting at that bottom for like 3 months. But as you can see, there's a reason why I drew that fib channel line, right? If we take a look at the weekly to see where it's actually from, it's way down here. Look how great in play it is, right? It rejected off that line 1, 2, 3 times. So that would have been a great spot to buy it around that 160, 170 mark. If anybody decided to jump in on that one and held it since July, you would be up 114% right now on Netflix. Not too shabby, right? So where is it going in the short term? Because in the long term, I mean, it will climb. I know they're coming out with new policies right now when it comes to sharing your domain name and all that stuff. It's going to really zone in on which household has it. So I'm not sure if they're going to lose subscribers on that one. Excuse me. Or force people to, subscribe because they've been sharing all this time. But I know they're also coming out with a lower tier, with the one with ads, so that might actually help revenue. Overall, I think Netflix is kind of here to stay. Even if people are deciding to go out, they're not going to cancel their subscriptions, right? Over the last 2 years, they've gotten so used to Netflix, it's just not going to go anywhere. The only thing that would really turn them off is the type of content that they produce. But even as we've seen, it's a very small minority that that really boycott a certain product, even if it is good or bad for them in the long term. But what I can see it climbing to once it drops back down, because again, you can see earnings, they weren't fantastic, right? So not great compared to what was expected, but it still climbed, right? So this is kind of showing me that regardless of how things perform, right now the consensus is for the market to go up before earnings season is over, and then once it is, it's going to drop hard. What I see for Netflix in the short term, so right here, there is a Fibonacci channel line, or what did I draw right here? Can't remember what this line signifies. Oh, it's a horizontal line, I think. Is it? Yeah, it's horizontal. I'm thinking it's diagonal for a second. It's probably because the other ones are running. But anyway, so horizontal line running, you can see it peaked, resisted, finally broke through, and then support. Okay, and then here, back in 2022, kind of shuffled around there and finally dropped way lower. Now we're heading back up to that line, which is going to be resistance. I believe we may hit 384 before it actually starts to drop back down. And how far is it going to drop down? Definitely not to its original lows, but if there's any gaps that were created, that would be a good telltale sign where it's going to go next. So let's see, this gap that was made, it was pretty much filled. There's really nothing that I can see. Let's see if I drop it down to the 1 hour, if there's anything, right? So by gaps, I mean things like this, right? If it has a gap in there, that means the stock jumped in price and there's nothing behind that. So as you can see, it dropped in price here as a big gap and it eventually got filled. Okay, just as an example, let's keep going. Right here, little gap happened. So I mean, that hasn't gotten filled yet. So potentially to 257, 259, we could see it get there, right? But that's pretty small. As you can see, it opened up way over here, but that's why it actually dropped for the day and then it went back up. So, I mean, between 260 and 256 is a gap. Here is a great one to see, right? You can see in earnings, it just spiked up. So, I mean, where did this money come from? Right? It happened before and after market. That's not when the big players are allowed to trade, technically, right? The people that have market access before and after are retail, typically, right? Large hedge funds, when they want to make big moves like this, they can't really buy before and after, but they can definitely set the sentiment, right? They control much more than just their actual funds. But just to give an example, it is a gap about this big to fill. Let's grab the actual box though. Okay, and you saw it pull down over there. So we still have approximately $11, 4.4% that's unaccounted for, right? So I could see it coming back down all the way to 241 just because of that. Let's see what else there is, right? So as you can see, there's a gap right there, and then it quickly got filled and up it went. So that doesn't count, right? This one, it's so small, it's not even worth it. It's like $1. Right? But as you can see, every single time that there's gaps made, they get closed eventually. You can see this one. It dropped down high and then eventually came up to there before going low once again. Right? But it did close it off. So because of that, right, what I want to say long term for Netflix, right, you can see this gigantic gap got filled slowly. The next big gap that we have is way up here, between 503 and 460. Actually, a little bit better. Let me properly increase that box. There we go. So 507 to 457. That's the next gap. That's $50 worth of value that's kind of missing somehow, right? That's almost 10%, 9.5% value of the stock. So that is where I believe Netflix will head in the long term. Short term, I do believe we'll fill this gap first. And if it's any, let's see how that's going to look like on the Fibonacci. Right, this is the newest, the lower high, all the way up to the high. Right, and as you can see, that gap is kind of sitting at that 786 line. Right, sitting at the 786 line, sitting at a Fibonacci channel line. I mean, there's three things that kind of show that it's going to head back down to this place. So once it gets back down to there, I'd be more than happy to purchase a few shares. All right, so preliminary target is right about there. Just draw it across. So there we are. Those are the three that you wanted to see, Amy. That's my general outlook on those. So, folks, I hope that helped. If you want to see any more deep dives with technical analysis for certain stocks, write it in the comments, and I'll see you next week.